Warren Buffett in his latest shareholder meeting talked about the stocks that he's buying, the ones he's holding, and what he is selling. Now, the five main areas that we'll go over, the five main areas that he addressed is his positions in Apple, Japan, and oil, and then also his sales in semiconductor and bank stocks. So his largest holding at 40% of his portfolio, I'm sure you already know what it is, 4 times larger than his next, the biggest position is Apple stock. He even added a very small amount to Apple at the end of 2022. Now, I just want, let's hear it out of the horse's mouth, or should I say, out of the goat's mouth. Warren, why do you like Apple stock so much?
Apple is different than the other businesses we own. It just happens to be a better business than any we own. And we put a fair amount of money in it. Apple, has a position with consumers where they're paying, maybe they pay $1,500 or whatever it may be for a phone, and these same people pay $35,000 for having a second car. And if they had to give up a second car or give up their iPhone, they'd give up their second car.
So whenever you own a business where consumers almost can't do without your product, they have to have your product, they need your product to function, this is a great business to own because consumers are going to continually keep buying your product. It's a great business model, and it means earnings in the future are going to be pretty stable. Buffett, he made some mistakes with Apple a few years back when he sold, and he even admitted himself this was a terrible mistake.
I made a mistake a couple of years ago when I sold some shares when I had certain reasons why gains were useful to take that year from a tax standpoint, but having heard me say that, it was a dumb decision.
I mean, it kind of goes against what he normally likes to do, which is buy big into a company and just leave it, hold it, and forget about it. So his strategy with Apple is now just to hold and let the business do what it does best. Let Tim Cook work his magic, kind of. Mainly it was Steve Jobs who started the initial magic, but Tim Cook's done a good job. Let Apple do what it does best, make good quality products, and generate a ton of cash flow. But let's switch gears, because the most recent area of stocks where Buffett is buying is not where you'd expect. It is in Japan, not the USA, but Japan. He's bought stakes in Japan's top 5 trading houses. Let's go over the reasons why, or let Buffett explain why.
Well, the Japanese thing was simple. There were 5 very, very substantial companies, understandable companies. Here they were sitting as a group where they were earning, we'll say 14% on what we were going to pay to buy them. They were paying decent dividends. They were going to repurchase shares in some cases. They owned a whole bunch of businesses that we could understand as a group, although we didn't mean we had deep understanding on any, but we seen them operate and everything. There wasn't anything to it. And at the same time, we could take out the currency risk by financing in yen, and that was going to cost us 0.5%. Well, if you get 14% on one side and 0.5% on the other side.
So just to be clear, the 5 Japanese stocks that Buffett is talking about is Japan's major trading houses. That's Mitsubishi Corp, Mitsui & Co., Itochu Corp, Marubeni Corp, Sumitomo Corp. Apologies for the pronunciation. I'm sure some of those are wrong. A lot of these stocks, though, if you just look at the fundamentals of the stocks, you don't need to know how to pronounce the name. Just look at the fundamentals. A lot of these stocks are paying very healthy dividends. They're selling at low PE ratios, aka their profits on average is around 14% of the price you pay. And Buffett, he understands these businesses. He understands their business model. And on top of this, he thinks the managers are making good choices and smart moves for the future. This is exactly what you want in an investment. The nice thing about Japan, unlike areas like Taiwan, is it doesn't come with the Chinese risk. The other area that Buffett likes is oil, in particular Occidental Petroleum, which he bought in 3 out of the 4 most recent filed quarters. This may be the stock that he bought the most, not in terms of weight, which was very weighty, but in terms of how regularly he bought in each quarter.
We like Occidental's position in the Permian, and we wouldn't like that position. It got to minus one day. It got to minus $30 a barrel. That was crazy, of course. But if oil sells it at X, You do very well and it sells at half of X. Your costs are the same, and it doesn't change the production, and it doesn't work as well. We don't know what oil prices will be, but we do very much like the Occidental position they have, and that's why we financed them a few years ago, and it looked like it was a terrible mistake. Becky Holub she's an extraordinary manager of Occidental. Her first job was with City Service. That was the first stock I bought in 1942. She knows what happens beneath the surface.
So he's talking about Occidental Petroleum, ticker symbol OXY, which pays a great dividend and has a very low PE ratio. Right now, Occidental has this great asset, which is it has 2.9 million net acres in the US Permian Basin, which is one of the most prolific oil basins in the world. Buffett, he likes this asset. He realizes that when oil prices are low, yes, Oxy will struggle like they did in 2020. But when they reach above a certain amount in price, their costs stay the same. And the money, the profit, starts to flow in. If you have a good manager running the business, which Buffett addressed, he said he likes the manager, it can be a business which does very well for shareholders in terms of generating free cash flow. If you look at Buffett's most recent buys, he essentially only made 2 meaningful stock purchases over the past 2 quarters, and one of those is Occidental stock. So that gives you a feel for how much he likes the company. And as you can see, the other large buy was Taiwan Semiconductors, except there is an important asterisk that you need to be aware of with this stock.
Taiwan Semiconductor is one of the best managed companies and important companies in the world. And there is not, and I think you'll be able to say the same thing 5 or 10 or 20 years from now. I don't like its location, and marvelous people, marvelous company, but I'd rather find a marvelous people. I won't find it in the chip industry, but marvelous people and marvelous competitive position and everything. I'd rather find it in the United States.
Essentially what happened here was Buffett made one of his largest buys in 2022, Taiwan Semiconductors, and people thought, oh, this might be a great stock to start investing in. However, the very next quarter, he dumped most of his stocks, 86% sold. He said in the shareholders meeting, he liked the business, he liked the management, the only problem was location. I don't think he's talked about the specific reasons why he doesn't like Taiwan as a location. I mean, I'm sure we can guess why. A lot of investors think that it's because of the Chinese risk and the potential threats that they offer to maybe take over or at least disrupt business. And obviously with investing, Buffett likes security. All investors like security. He doesn't like the unknown. He doesn't like high risks. So that's why he's avoiding Taiwan Semiconductors and he's reduced most of his position there. Another sector that he thinks offers high risks and unknowns, which he previously liked, is bank stocks. He sold out of most his banks.
And we want to be there if the banking system temporarily even gets stalled in some way. It shouldn't. I don't think it will, but I think it could. And I think that the incentives in bank regulation are so messed up, and so many people have an interest in having them messed up, that it's totally crazy. I mean, in physics, you know that pi is going to be 3.14, infinite number of numbers after that. But no matter what happens, but you don't know what has happened to the stickiness of deposits at all. It got changed by 2008. It's gotten changed by this. I mean, and that changes everything. And
with banking, there is just too many unknowns. And just like Taiwan and the unknowns with China, Buffett doesn't like it. He wants security and something as close to a guarantee as possible. So this now leaves him with these 10 stocks as his largest holdings as of the most recent 13F filings. You've got HP, you've got Activision Blizzard and the whole situation that's happening there with Microsoft trying to buy them. You've got Moody's at number 8, Occidental at number 7, Kraft Heinz 6, American Express 5, Coca-Cola 4, Chevron 3, Bank of America 2, which, basically in his shareholder meeting, he said the main reason he's holding onto the stock was because of loyalty, and he originally proposed to make a position in Bank of America, and he likes the managers there, so he's still holding on there. And then lastly, of course, we've addressed this, Apple at his number 1 position. So this is his publicly available US stock portfolio, stocks that he legally has to disclose. Then, of course, you've got his private holdings, the likes of NetJets, Dairy Queen, Duracell, all of these companies over here, Geico, of course, Berkshire Energy, See's Candy, which he keeps going on about. He loves See's Candy. So all of these, he fully owns these companies. And then you've got the stocks here. But then, don't forget, he's got a massive, massive cash pile of $130 billion. He still wants to try deploy as much of that as possible. He does need to keep a decent amount of that still for his insurance backup purposes, but still, he does want to deploy quite a bit of that. And then, don't forget, you've got the holdings that he doesn't have to disclose, which a lot of these are the international stocks that he holds, the likes of the Japanese investments that he's recently made.